if we look at the backdrop right now, Raul, finally we have some decent confirmation from the live data that we track that the manufacturing cycle is actually picking up. I feel pretty comfortable saying that we'll probably reach plus 55 territory in ISM manufacturing within a couple of months from now. And we see this exact Capex cycle spilling over to the domestic activity, which is what we've been waiting for, right? We've seen this Capex cycle among the big four over the past 12, 18 months, but we've patiently waited for it to spill over to the domestic Capex cycle, but that is happening now. On top of that, all big data aggregators following price developments in the US will tell you that inflation is nowhere to be seen amidst this, which is an odd cocktail, right? You rarely see that. And, you know, on the nowcasting we do, inflation is trending between, say, 15 and 17 basis points a month, which is essentially below the 2% target when you annualize it. That is an incredibly bullish backdrop when you have inflation basically falling relative to what you've seen over the past year, at the same time as the domestic manufacturing cycle picking up speed. That is a textbook Goldilocks setup. And I don't think that's appreciated by the market right now, since we're stuck in this AI fear mode. And let me just say that I actually do appreciate these grumpy old men hating on the Capex cycle, because it's kind of their job, right? If you're a credit analyst or if you're a credit investor, you need to be a glass half empty kind of guy, right? Because that's what you're paid for. And it's obviously the job of the executives of Anthropic, OpenAI, and the Big Four to convince these guys that they're wrong. And the way that they'll convince them is that they'll show a strong return on investment over the next 1 to 2 years. And I think they'll show that. And once that becomes increasingly clear over the next 2 or 3 quarters, we'll get a rebound in Nasdaq, if I'm right.
Also, it profoundly looks like the Greenspan year playbook is A, what the government wants, and B, what is happening. So a look back over that period, productivity exploded, core inflation went nowhere, GDP growth exploded. What did Greenspan actually do? Nothing.
Yeah.
I mean, he did nothing over that whole period, really. And so that's, I think, what Walsh will do is nothing. Cut rates and then sit on it and let productivity lower inflation. So inflation's not a problem. And let the economy run hot, which is what Trump's been saying, which kind of helps them reduce the debt to GDP or at least keep it stable. And that seems to be the playbook.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button, and also check out what video's next, because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member-generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.